Today's session is entitled Hiring People Who Live in the U.S. Who Aren't Citizens. And this is being given by the Women's Business Development Center. My name is Maura Mitchell. I'm Managing Director of Entrepreneurial Program and Services, Division 2. We're so happy to have you here. I've been at the center for over 7 years, and the Women's Business Development Center is well known as a nonprofit that helps entrepreneurs start up by offering access to capital, access to contracts, and access to connections. So we welcome you here today and thank you for joining us. I just wanted you to put in the chat, on a scale of 1 to 10, 10 being the highest amount of support, how well do you feel supported by a team? So it can be a team of your employees, if you have employees, or a supportive team outside of your business, maybe your family, or maybe one of us at the Women's Business Development Center. If you are a client, hopefully we are supporting you. So please put a number 1 to 10 in the chat to let us know how you are feeling. 10, wow, fantastic. Nita, you feel highly supported, which is good, which is what entrepreneurs need. Oh, and 10 from you also, Catalina, fantastic. Okay, well, thank you for being here today. I'm gonna go ahead and introduce Mike so he can get onto the topic. Mike is a senior stakeholder liaison for the Internal Revenue Service working out of their Chicago, Illinois field office. Mike has been with the IRS since 2002, starting as a revenue agent in Downers Grove, and since 2009 in the role of stakeholder liaison. Mike holds degrees in business administration and accounting from Indiana University, an MBA from DePaul University, and also a Master of Science in Taxation from DePaul University. So here we have Mike going to give us some information on this important topic. So I'm going to stop talking and let Mike go because he's got a lot of good information.
Thank you, Maura. Thank you, everyone, for joining us here today. This is the last of the 8 lessons that I've been very fortunate to present for the Women's Business Development Center. So I want to thank Maura and Karen and everyone at the WBDC for allowing us this opportunity to present what we believe is very important information for entrepreneurs. Today's lesson presentation is, as it reads on the screen, hiring people who live in the United States who are not citizens. So that is what we will be discussing. So as an employer, you would need to verify anyone who's coming to you for employment. You would need to verify the employee's identity and identify the worker tax status of that that individual. An employer will withhold employment taxes from this individual's pay, and we'll discuss that. Employment taxes are federal income tax, Medicare tax, Social Security tax. So we discussed those in depth yesterday's presentation, which is presentation 7, lesson 7. If you're coming back to the WBDC website to look at the lessons. We'll also look at filing accurate and timely withholding tax returns. We are going to, throughout today's presentation, identify publications that are available. Everything that I identify is free, and it's available at irs.gov. We have an hour here with you today, and once we are done, we want to identify the resources that are available to you 24 hours a day, 7 days a week at irs.gov. Those two listed there, publication 519 and publication 515. are especially helpful for the subject matter of today's presentation. Just to give you a visual, these are the publications that I just mentioned, again, available at irs.gov and for free. So the first step when you hire someone, the first step is to determine that worker's tax status. And this goes for whether the individual is a United States citizen or someone who is not a citizen. If someone is not a citizen, we also refer to them as aliens in our presentation here. So whenever you hire someone, the first step is to determine that worker's tax status. And for this discussion, we are, we're hiring individuals, and there are three possibilities that you see there on the screen. You be hiring either a U.S. citizen, a U.S. resident alien, or a non-resident alien. So both a resident alien and a non-resident alien, those are not U.S. citizens. We'll go into more detail about the definition of a resident alien and a non-resident alien. It really kind of a misnomer when it's read as non-resident alien. We typically are talking in that situation about someone who has been in the United States, but maybe not for the period of time that is defining what a resident of the U.S. is. So just trying to clear that up a little bit here. As mentioned down at the bottom on that last item there, for tax purposes, an alien is an individual who is not a U.S. citizen. So when we use the term alien, we're not talking about someone from outer space. We're talking about an individual who's not a U.S. citizen for tax purposes. One other thing that we want to bring up here at the beginning of the presentation is identification numbers that are used for tax purposes. So a U.S. citizen, that citizen's tax identification number also happens to be their social security number. For a foreign individual, that foreign individual who's not a U.S. citizen, that individual may have what we call an individual taxpayer identification number, or an ITIN. Now, a social security number is, of course, provided by the Social Security Administration. That's where you get a social security number. An ITIN is a number that is provided by the IRS. And as it's identified down in that third bullet point, ITINs look a lot like social security numbers. There are 9 digits to an ITIN. And an example is listed there. It would start with the number 9 and have 9 digits in total. So again, the IRS is the organization that is issuing an ITIN, and it's issuing those ITINs to individuals who are not eligible for a social security number. An ITIN is issued regardless of an individual's immigration status. I want to make that very clear. And an ITIN is not a work permit. So just giving this information up front to understand it as we go along. So remember, an ITIN is issued to someone who needs to report information for tax purposes, federal tax purposes. As I mentioned, the IRS is the organization that issues an individual taxpayer identification number. And ITINs can be obtained online here on irs.gov, and you're looking at that site right now. So as it says there, taxpayers with an ITIN can complete the registration process to access their IRS online account. So within the last couple of years, the IRS has gotten a lot of funding from Congress, and one of the things that it has put in place for individuals is that you can create your own online account with the IRS. And that online account allows you to see information that the IRS has on your account. So it's really the IRS's record of the tax returns that you filed, the payments that you've made. And an ITIN, someone with an ITIN can create an online account. So, as an employer, you need to determine the eligibility of a non-US citizens to work in the United States. All employees coming to you must complete a Form I-9, which is the employment eligibility verification. That is a form that you can get from the United States Immigration, Citizenship and Immigration Service. USCIS is the acronym, and they get that at uscis.gov. Okay. You can find out if a potential worker is eligible to work in the United States by using what is called the E-Verify system. And that's also available through the U.S. Citizenship and Immigration Services website. It's everify.gov. Citizenship and Immigration Services website provides all this information, as I mentioned. And the E-Verify system compares information from an employee's I-9 that they're submitting to you as the employer to data from the Social Security Administration and the U.S. Department of Homeland Security to confirm employment eligibility. Please remember, it's against federal law to knowingly employ someone who is not authorized to work in the United States. However, if you do employ illegal aliens, payments you make to them are subject to federal tax rules as payments you make to aliens who are here in the United States legally. If you hire someone who is not a U.S. citizen, but who is still eligible to work in the United States, your first step is to find out if they are a resident or a non-resident alien. So just to give you a visual of the Form I-9 that you have to obtain from anyone who's coming to you looking for employment. This is the I-9. It's from the U.S. Citizenship and Immigration Services. This is a visual of that E-Verify system that I just mentioned. It is where you can, again, take the information from the I-9 that the individual has provided to you and run it against the information in the database that is here at the E-Verify system. And again, as I mentioned, it's verifying information against information held by the Social Security Administration and the Department of Homeland Security. And you're identifying whether that individual has the authority, has been authorized to work in the United States. So let's talk about a resident alien. A resident alien, and again, an alien is someone who is not a U.S. citizen. A resident alien is someone who has a green card issued by the USCIS or who has met the substantial presence test. A green card is the United States Citizenship and Immigration Services Form I-551, and it is identified as a permanent resident card. It gives the holder the right to reside permanently in the United States. It also gives the holder the right to work without restrictions. A green card holder is also known as a lawful permanent resident, but is not a citizen. Lawful permanent residents who are waiting for their actual green cards may have an I-551 stamp on their foreign passport. So let's talk about the substantial presence test now. If an individual meets the substantial presence test, they also can claim resident alien status, but without a green card. So someone without a green card who can still claim resident alien status if he or she meets the substantial presence test for the calendar year. To meet this test, the individual must be physically present in the United States when on at least 31 days during the current year and 183 days during the 3-year period that includes the current year and 2 years immediately following. Immediately before that. So in other words, the person meets the 183-day test if the sum of the following is at least 183 days. So 1, the number of days in the United States during the current year, plus 1/3 of the number of days in the United States during the preceding year, plus 1/6 of the number of days in the United States during the second preceding year. If that equals or exceeds 183 days, that person has met the substantial presence test. Here, let's look at an example. The individual was physically present in the United States in 2020, 2021, and 2022. In each of those years, the individual was present in the United States for 150 days. So if we do the calculation, and that 2022, it's 150 days plus 1/3 of 150 days from 2021, and that of course is 50. And then 1/6 of the 150 days in 2020, that's 25. If you add the 150 plus the 50 plus the 25, that comes to 225 days. And this individual meets the 183-day substantial presence test for 2022. Some rules about counting days. There are rules. So for example, you do not count days someone is present in the United States as a teacher or a trainee under a valid J or Q visa. Now, IRS publication 519 has more information about that and a complete list of exceptions. You can also use this resource, that last resource, the IRS Business and Specialty Tax toll-free line, that 800 number, to ask questions about this particular subject. So in summary, regarding resident alien, and again, an alien is someone who is not a United States citizen. If your potential employee has a green card, an I-551 stamp on their passport, or passes the substantial presence test, there's nothing more to do. You treat that individual like a U.S. citizen for income tax withholding purposes, as well as Social Security and Medicare tax withholding, the employment taxes that we talked about yesterday. You would also include this individual and the wages that you're paying them when you're paying you the employer when you're paying your federal unemployment tax, your FUTA tax. The FUTA tax is a tax that is a liability just of the employer. But in this situation, you're including the wages you're paying that particular employee as part of your calculation to come up with your FUTA tax. Some resources that are available for you. If you go to irs.gov and enter green card test or substantial presence test in the search box, you'll come to more information than what we were able to get to here today. IRS publication 519, the tax guide for aliens. Here I mention it again, another resource for you. And here's just a visual for you on that those resources that are available at irs.gov. You can see a number of links down at the bottom to take you more detailed information. So let's talk now about non-resident aliens. On the previous slides, we talked about individuals who were in the United States for that period of time that we were talking about. Let's now talk about non-resident aliens. This is defined as someone who is not a U.S. citizen or a resident alien, the resident aliens we just talked about. So these individuals, these non-resident aliens, could be living in the United States, but do not meet the substantial presence test that a resident alien meets that we just went over. All non-resident aliens, however, are not treated the same for tax purposes. And in this segment, we'll discuss the general rules that apply to non-resident aliens and exceptions that apply to certain non-resident aliens. When someone hires a non-resident alien from any other country as an employee, he or she must give them the Form W-4, which is the employee's withholding certificate. That employee's withholding certificate is where the employee identifies for you, the employer, how much federal income tax to withhold from their pay. So when you hire the non-resident alien from, again, from any other country as an employee, you've got to get from them a completed Form W-4, and you must verify the form is completed correctly according to the special instructions that are provided in IRS Notice 1392, which is a supplement to the Form W-4 instructions. This is a visual of that Form W-4. Again, it's where the potential employee, your employee, is identifying for you, the employer, how much federal income tax they want withheld from their pay. This is a visual of that Notice 1392 that is a supplement to the instructions for the Form W-4. And this is specifically for non-resident aliens. So let's continue on with non-resident aliens. Non-resident aliens cannot file federal income tax returns using the standard deduction unless the non-resident is a student or business apprentice from India. This is getting into some specific details. But what it's identifying for you on that Form W-4, one of the items that the individual is identifying for you as the employer is whether or not they are going to take a standard deduction, which gives information as to how to calculate how much federal income tax to withhold. So that's why we're pointing this out here on the first bullet point. Non-resident aliens cannot file federal income tax returns using the standard deduction. Now, as a result, to calculate the income tax withholding, employers must make adjustments to a non-resident alien's wages using the general withholding tables in IRS publication 15-T. Now, this is obviously information for employers who are doing the employment taxes themselves. But as we mentioned yesterday, we understand and see that a lot of business owners do use to payroll companies to do these calculations and withhold the taxes. We did provide information to you, and there's information on irs.gov regarding how you can find payroll companies. A lot of great information there if you choose to go that route. So there are 2 steps required for calculating how much federal income tax to withhold from the wages for non-resident alien employees. And let's look at that now. If you're doing it yourself, you want to use these steps. In step 1, you would go to IRS publication 15T, which again is the federal income tax withholding methods. And there are 2 tables of amounts to add to your non-resident alien employees' wages, depending on whether you pay them weekly or at some other frequency. Table 1 pertains to non-resident alien employees first paid wages before 2020 and which have not submitted a Form W-4 for 2020 or later. And Table 2 pertains to non-resident alien employees who have submitted a Form W-4 for 2020 or later, or were first paid wages in 2020 or later. So for step 2, you would enter the amount figured in step 1 as the total taxable wage on line 1A of the withholding worksheet in that publication 15T for you to figure out the federal income tax withholding. You would then add amounts from tables 1 and 2. They're added to the wages solely for calculating income tax withholding on wages for the non-resident alien employee. The amounts from the table shouldn't be included in any box on the employee's Form W-2 and don't increase the income tax liability of the employee. The purpose of this adjustment is to figure the amount of federal income tax to withhold from wages of non-resident alien employees. And again, this procedure only applies to non-resident alien employees who have wages. There are some exceptions to the general rule for withholding of federal income tax from the non-resident aliens that are being employed. A non-resident alien may be a resident of a country that has a tax treaty with the United States. That treaty may provide for lower tax rates or even exemption from withholding of for these individuals working in the United States. Remember, these employees, for tax purposes, are non-residents of the United States. They may reside in the U.S. for some period of time, but that time period does not meet the substantial presence test that we went through. If a non-resident alien employee wants to claim a tax treaty exemption from U.S. federal income tax withholding, instead of completing the Form W-4, the employee must give you, the employer, a Form 8233, which is entitled Exemption from Withholding on Compensation for Independent and Certain Dependent Personal Services of a non-resident alien individual. You, as the employer, must report wages exempt under a tax treaty paid to a non-resident alien on IRS Form 1042, which is the annual withholding tax return for U.S. source income of foreign persons, and Form 1042S, the foreign person's U.S. source income subject to withholding. So any wages paid to a non-resident alien over and above the exempt amount should be reported on Form W-2, which is the wage and tax statement that you, the employer, need to provide to the employee after the end of the year. And you're also providing it to the Social Security Administration. That's the Form W-2. I mentioned that Form 8233. This is just a visual for you. I also mentioned the Form 1042, also providing you with a visual view of that form. This is the Form 1042S, which is to report income described under the amounts under the Form 1042. And this is just, again, a visual for you. This is another form that needs to be completed. So let's look at non-resident aliens and some exceptions to the general rules for federal income tax withholding from their pay. Wages exempt from withholding. Per the Internal Revenue Code, a non-resident alien's wages or non-employee compensation are exempt from withholding of federal income tax if all three of the following conditions are met. 1, the non-resident alien performing services is present in the United States for a total not exceeding 90 days in a taxable year, and the compensation for such services does not exceed $3,000, and the non-resident alien performs the services as an employee of or under contract with a non-resident alien individual, a foreign corporation, or foreign partnership not engaged in a trade or business in the United States, or the foreign office of a U.S. citizen or resident alien individual, a U.S. corporation or U.S. partnership, including from within a U.S. possession. So a lot of technical details there. Some more exceptions to the general rules for non-resident alien federal income tax withholding. A non-resident alien exception exists for wages or non-employee compensation paid to a non-resident alien. Those wages or non-employee compensation are exempt from withholding of federal income tax if both of the following two conditions are met. 1, the non-resident alien is present in the United States in F, J, M, or Q non-immigrant status, and the compensation for services is paid by a non-resident alien individual, a foreign corporation or foreign partnership, or the foreign office of a U.S. citizen or resident alien individual, a U.S. corporation or a U.S. partnership, including from within a U.S. possession. Non-resident aliens who fail to file an invalid or file an invalid Form W-4 as required by IRS regulations shall have federal income tax withheld at the rates pertaining to someone who's filing a federal income tax return as a single individual. And those rates are generally higher than if an individual was filing as married filing joint or as a head of household. Some more rules regarding the withholding of federal income tax if the individual you're employing is a non-resident alien. So in summary, remember that non-resident alien employees who receive wages from you, the employer, must follow special rules in that IRS Notice 1392 when completing the Form W-4. If a non-resident alien claims tax treaty benefits, he or she must use the Form 8233, which is entitled Exemption from Withholding on Compensation for Independent and Certain Dependent Personal Services of a Non-Resident Alien Individual, that they're going to complete that Form 8233 instead of the Form W-4. And you, the employer, must make an adjustment to your non-resident alien employees before using the withholding tables in that publication 15T. Let's talk about non-resident aliens again on this slide. Now, just like resident aliens, non-resident aliens are generally subject to Social Security taxes, Medicare taxes, and the FUTA tax. So you as the employer, if you've got a non-resident alien working for you, those individuals are still subject to Social Security, Medicare, and the federal unemployment taxes. But there are exceptions. Of course, we've already covered the filing of that Form 8233 if an employee wants to claim tax treaty benefits. Remember, though, that wages by a tax treaty are usually subject to Social Security and Medicare taxes. There is, however, a way for a non-resident alien employee to be exempt from Social Security and Medicare taxes. It's called a totalization agreement. These are agreements between the Social Security Administration and various foreign countries. They address the situation where dual Social Security taxation might occur. That is, when a non-resident employee works within the United States and must also pay the same kind of taxes to their country of residence on the same wages that they're earning in the United States. The non-resident worker who claims an exemption under a totalization agreement needs to give you, the employer, a certificate of coverage or similar statement from the appropriate agency of the foreign country, or if you're unable to obtain such a certificate or statement from the foreign country, obtain a statement from the U.S. Social Security Administration that their wages, the employee's wages, are not subject to Social Security taxes, U.S. Social Security taxes. The employer, you, the employer, you've got to keep the copy of the certificate for your records in case the IRS questions why you didn't withhold Social Security taxes. Let's here on this screen look at the scenario where you're employing a non-resident alien, but as an independent contractor. Remember, independent contractors are responsible for the payment of their taxes on their own. They are not an employee. So that is the difference between an independent contractor and an employee. An employee, you, the employer, are withholding the taxes that we've been talking about. So let's talk about the situation where you've got a non-resident alien working as an independent contractor. And here we're talking about independent personal services, and this is a tax treaty term, and it refers to work performed by a non-resident alien working as an independent contractor. This category of pay includes payments for professional services such as fees of an attorney, a physician, or accountant made directly to the person performing the services. The difference here is that you might have to withhold taxes on payments to them, even though they are not your employees. This makes a non-resident alien independent contractors different from the independent contractors that I was just describing. So who are US citizens or resident aliens. So this is a different situation that we want to make very clear here. So again, what I was describing, independent contractors who are US citizens, who are resident aliens, they are responsible for the payment of their own employment taxes that we've been talking about here. But in this situation where you've got a non-resident alien working for you as an independent contractor, that non-resident alien independent contractor is different, and that you may have to withhold taxes on payments to them, even though you're not, again, they are not an employee. They are an independent contractor. So let's look at this situation in a little more detail. The general rule is that you, the employer, must withhold 30% of each payment you make to a non-resident alien independent contractor unless they show proof that they have entered into a federal income tax withholding agreement with the IRS. They must provide you with 2 copies of a letter from the IRS that states the amount of the final payment up to $5,000 that is exempt from withholding, or they must give you a Form 8233 to claim a tax treaty exemption from all or part of the required federal income tax withholding. There are also special rules if you yourself, the employer, are a non-resident alien. If that's the case, please call the IRS business specialty line, that 800 number down there at the bottom of the screen, to get more information. So let's review how non-resident alien independent contractors are different from independent contractors who are US citizens or residents. Again, generally, you, the employer, must withhold 30% of the money that you pay them for their personal services unless the non-resident alien provides an IRS-approved withholding agreement or Form W-8 for reduced withholding. Non-resident alien independent contractors use the Form 8233 to claim their tax treaty benefits and any allowable withholding exemptions. Once you're done calculating the withholding, then it's time to deposit and pay the tax withheld. And when it comes to making the tax deposits or paying the tax withheld for non-resident aliens, the rules are the same as they are for taxes withheld for US citizens or resident aliens. For more information on this and depositing and paying business taxes, there's some videos that are available at irs.gov that are identified. The Small Business Tax Workshop. There's IRS Publication 15. And the Small Business Tax Center, Small Business Self-Employed Tax Center, that is also available at irs.gov. Now, let's talk about filing employment tax returns. You, the employer. Employers need to provide a Form W-2, which is the wage and tax statement, and it identifies the amount of wages that the individual earned from you, the employer, during the calendar year, that you're providing that Form W-2 to both resident alien employees and non-resident alien employees who did not use the Form 8233 to claim tax treaty benefits. You would include these individuals as employees, both as a number of employees and the wages paid to these employees. You're including them most typically as an employer on Form 941, which is the employer's quarterly federal tax return. That's kind of a misnomer. You might think that that's an income tax return. No, that's the form that the employer is filing with the IRS to identify the employment taxes that the employer has calculated and withheld from employees' pay during the quarter. Some very small employers only need to file a form, and it's a Form 944 on an annual basis, and that would be the employer's annual federal tax return, which again is an employment tax return. So let's look at the Form 8233 procedures for employers. An employer is going to provide a Form W-2, that wage and tax statement, to both resident alien employees and non-resident alien employees who did not use the Form 8233. You're including them on the Form 941 that we just mentioned. You'll need to review the Form 8233 and, if it's correct, verify in Part 4 withholding agent certify in Part 4 that it's correct in Part 4 of that Form 8233. You are responsible for withholding, and you are considered the withholding agent if you're not using a withholding agent, an organization, a payroll company. You would then mail one copy to the IRS within 5 days after you receive it, and give one copy to the non-resident alien and keep one copy for your records. See Form 8233 instructions for the mailing address, and wait at least 10 days to see if the IRS has any objections. If the IRS notifies you that it objects to the non-resident alien's claim for exemption from withholding, you must immediately begin withholding. You obtain a new Form 8233 every year as long as you pay the person to work for you. So for your Form 8233 filers, you will have a new employment tax return filing requirement with the IRS. And they are the Form 1042, the annual withholding tax return for U.S. source income of foreign persons, the Form 1042S, the Form 1042T. We showed you visual copies of those earlier. Now remember, this is for your non-resident alien employees who claim tax treaty benefits, as well as for any non-resident alien independent contractors you paid. By March 15th of the following year, the following calendar year, during which the non-resident alien performed the services, you must file the Form 1042 and 1042S with the IRS. Let's look at the Form 1042S. You file a separate Form 1042S for each person and each type of income you paid that person, whether you actually withheld the money or not. You must also issue a Form W-2 for any amounts that are not covered by a treaty exemption. So for example, if you live in a state or other locality that taxes this income, and that might even require withholding, you will need to file a Form W-2 with those taxing authorities for the income and any withholding. Those taxing authorities do not take the Form 1042S. You would give a copy of the Form 1042S and any Form W-2 you filed for each non-resident alien employee who claimed tax treaty benefits, and to each non-resident alien who provided independent personal services, whether you withheld taxes or not. If you file your Forms 1042S on paper, you must also include a Form 1042-T, That's the transmittal form with the copies that you send to the IRS. Finally, if you must file Form 1042-S for even one person, then you must also file an annual return on Form 1042. You do not need to give a copy of this form to the individuals who work for you, but you do need to keep a copy for your records. So let's review. Hiring people who are not U.S. citizens usually requires some additional procedures, as we've discussed. The penalties for not meeting your withholding requirements can be quite substantial, just as they can be for not withholding or reporting properly when you pay U.S. citizens. For non-resident alien employees who are not claiming tax treaty benefits, you would use Form W-4 following the instructions in IRS Notice 1392 and Publication 515. You would include them on the Form 941, the employer's quarterly federal tax return. Again, most employers use the Form 941. The very small employers can use the Form 944. Agricultural employers use a Form 943. So just you're going to give the Form W-2. You're not only giving it to your employee, but you're giving it to the IRS and other taxing authorities, such as state and local authorities. In addition, for non-resident alien employees who are claiming tax treaty benefits, you would use the Form A-233 instead of the Form W-4 and withhold according to the treaty. Include them on the Form 1042 you file with the IRS. You give the IRS the Form 1042-S and give them and any localities taxing them a Form W-2. For non-resident alien independent contractors who are not claiming tax treaty benefits, use Form A-233 instead of the Form W-4 and withhold 30%. Include the withholding amount on the Form 1042 you file with the IRS. Give them and the IRS the Form 1042-S and give them and any other taxing authorities, local, state, the Form W-2. We've gone over a lot of information today. It's very detailed, specific information. We want to make sure that you understand that there's information at irs.gov, as we've been discussing. Those publications are available for you. For information on the U.S. Citizenship and Immigration Services website, uscis.gov, another great resource for you. With that, I want to thank you for being here today. We really appreciate the opportunity to present this important information. If you need to get a hold of me, if you have any questions, this is my contact information, so I'm happy to help. And with that, I'm going to turn it back over to Maura and thank her again for the opportunity to present. We really do appreciate it.
Thank you so much, Mike. We do have 2 questions in the chat that I told we would consider at the end. One said, I would also love to hear about having them on a 1099 if possible.
Have them, the independent contractor?
Yes.
Would they be
This is
only
from
if they're
Marina.
only if they're a citizen, the 1099, or otherwise we would follow the rules that we were discussing here in the presentation.
Okay, Marina, does that answer your question? Marina had that question. And then Jasal said, does all of this also apply to non-residents on H visas?
Um, I off the top of my head, I don't know. I'd be happy to research that and get an answer to you. If you could send me an email to that email address that you see on the screen. I don't want to give you bad information, and I just don't know off the top of my head. I'm sorry.
Okay, I will
Will
put,
do, Mike, and thank you. Really appreciate it.
I will put this, your email in the chat so people can just take it from there and reach out to you. Okay. Thank you very much, Mike. We appreciate your help during this 8-session workshops, I guess, session program. We saved all of the good information into our YouTube channel, so please, people, look for it there. I put that link in the chat. Thank you very much, and we wish everyone good luck with all of their tax issues. Please reach out to us with questions. We can forward them to Mike and vice versa. We are happy to help you. We offer no-cost one-on-one advising sessions at our website. Let me just put that in here. You can go to the team and book appointments with us. So if we don't have any other questions, we have 3 minutes to spare. If you have one more question, we're happy to help. Otherwise, please reach out to us.
Thank you so much, Mike and Maura.
Thank you, Karen,
Thank
for
you.
organizing this.